Hey everybody, so as promised, I'm making another Tesla technical video. So the reason why I'm doing so much technical analysis on Tesla these days is because we're having some crazy moves in just the last few days. So, I'm just gonna look at this 30-minute, 30-day chart. So this is where I'm at, 30 days, 30 minutes chart. So right here, we had this gap. It went all the way down to around 170. And then right here in this price action right here, we filled that gap. Now we filled it and then we rallied and then we faked people out and then we retested that 170 gap. We actually went a little bit below that. So we went all the way down to like 169.34. So that was really just tricking bears, thinking that we're going to have more downside. But as you guys can see, the bulls are doing pretty good right now. So let's just talk about the move that we made this week. So we started all the way from around 195. We made it all the way down to around 169.30. So that is over 10% down in just a matter of days. So when you see something like this, you do not want to be shorting further. I mean, this is a dangerous situation to short in when you're almost 10% down on a week that's not related to earnings. So I definitely want to emphasize that, not related to earnings. So if you do see a stock moving 10-15% down after earnings, that's when you want to be cautious because that is related to the actual fundamentals. Here, you have a lot of people spewing FUD, but you're not going to get the actual data until the actual quarter is released. So that is when, if you see 10-15% selling, you want to be careful because there could be more. So let's just talk about the more recent price action right around here. So as I've been mentioning, we're pretty darn oversold. We're even way oversold the lower implied move for this week's options. So if you want to learn a little bit more about this, watch my last video. I'll go ahead and link it down below. So let's just zoom in on the more recent price action here. So do notice that we do have this gap right up here. It takes us all the way to around 193.70. So this could be, if we make it back out of this chop zone right here, this is where we could end up going. So the end of this chop zone is right around 184.40. So yeah, like I said, if we make it above this, there is a pretty decent chance that we could fill this gap right there. But we're still a ways away. We're just happy to be within this yellow chop zone. So look at this candle right here. So this candle happened a few days ago. So this is right around 179.30. And then it took us all the way down to 174-ish. So this was a pretty massive candle. Now notice that right here, we start chopping around. So we just chop around, chop around, chop around, and then we're having this resistance right around 175. That's about 175.30 right there. So do notice that once we break out of that 175.30, we're starting to reverse this entire candle right here. So when you see a big move like this, and then you see a resistance level right around here, and then we start getting above that resistance level, then what usually happens is that you can see an entire candle like this getting reversed, which is kind of what's happening right here. So do note that now we're at this resistance right around 179.32. We're starting to see all this indecision pricing. So we could essentially just chop around here within this chop zone. So honestly, I think the ideal situation is for us to just stay within this chop zone right here for the moment, because the longer we stay here in this chop zone, the more support we're building out in the future. So that's key about technicals. When you go sideways for a longer period of time, you're building out very, very strong supports that will definitely be a good thing in the future. But it could also be a bad thing in the shorter term, especially because it could end up as resistance. So I do want to explain both sides of that. So right now, we're in this chop zone. It's right around 178. It goes to around 184.40. We want to ideally be within this. If we break out too fast, if we just break out too fast to this, and then we just go and fill this gap, then I think that, you could see more selling. So that would be a very, very primo opportunity for bears to just completely attack this thing right from this gap fill if we just go straight up from here. So that's always a scenario. So I do want to talk about, the crazy scenarios, because sometimes Tesla has crazy, crazy moves. And when we saw like 13% down, what if we have 13% up? That could entirely happen. So now, in the shorter term, what's a little bit more realistic? So let's say that we get back into this chop zone, which we are right now, and we start holding this 179.32 level. So if we start holding this 179.32 level, it's entirely possible that if things do look a little bit more bullish, we could try and reverse this candle right here. So this is a massive, massive candle, you guys. So this literally goes from around 185.60 all the way down to about 176.60. So if we hold this 179.32, it's possible, especially if we break above 180.58. If we break above this 180.58, it's entirely possible that we could just go all the way up here to this 183.60 level to reverse this candle right here. So hope you guys enjoyed the technical analysis. Have a good one, and do check out the video that I'm going to link down below if you haven't already.